Chase Bank is offering $3,000 to first-time home buyers to help you out with your down payment. Take advantage of all of it right now. We're going to talk about the $3,000 down payment assistance from Chase Bank. And then we're going to talk about down payments that you can do for just as low as 3% of the sales price of the house that can come entirely from gift funds, which is really interesting, right? And we're going to talk about how to opt out of your mortgage insurance, even if it's already reduced. So all that is in today's video, so don't go anywhere. And we're also going to talk about your transition from renting to home ownership, all within these unpredictable times with the pandemic going on, the coronavirus. So this is a big one, so watch the whole freaking video. All right, so really quickly, my name is Pierre MEGIE, right? What's up to all of my returning subscribers? And if you're brand new, consider subscribing, right? Because I just give free advice and value with different topics regarding the real estate industry, right? But what I'm most known for, though, is helping real estate agents start in real estate and leverage an all new sub niche within the industry called apartment locating, where you just help every normal, everyday people rent apartments, and then you get a commission from the apartment building. And it's like the easiest business model to do, especially compared to being a traditional realtor, and the same earning potential is still there. So that's what I do, right? But moving on to the details, here's what you guys clicked on, right? So a lot of people think it's crazy to buy a house right now during these tough times, right? So the housing market's hitting an all-time high right now, right? And I bet a lot of people in your life are just telling you and recommending to hold on to all your cash during these unpredictable, uncertain times. So I get it, right? Like, that's the advice. I know what's really going on in today's market, but in my opinion, that's exactly why you might as well put your cash into something like building equity into property, because the times are uncertain. And I bet if you have any kind of interest in real estate, you probably prefer real estate over the stock market, like myself, right? I might be biased, but I bet you feel the same way if you really do like real estate. So put your cash towards building equity in your first home. And we're going to talk about how there's actually assistance right now to get past the biggest hurdle, which is having the cash out of pocket to come out and then cover the down payment, right? So you'll find out in today's video that as long as you're stable with your income and like you have a certain amount of emergency funds set up, hopefully you'll consider that the housing market right now is a good time to get started and begin your big move from renting to home ownership. All right, and Chase Bank is actually going to assist you with $3,000 as a down payment, so that's going to really help. All right, guys, so let me tell you a quick story about my client Jessica, right? I met Jessica when she was looking to find an apartment. So as an apartment locator, I helped her lease her first apartment, and then she was saving up for a house, right? So I've worked with Jessica for a really long time, and it's a really amazing story because she ended up purchasing new construction right around the time of coronavirus, right? And I want to just kind of explain to you in a realistic example of a client that I actually worked that benefited during coronavirus and how she bought new construction, like a new home, right? So this story is awesome. Check this out. So I first leased Jessica an apartment when she was 18 years old, right? Very surprising how young this client was, you know, and already starting to begin saving her money and then really preparing for the future, right? So I don't really see that in a lot of young 18-year-olds, right? So this is a really, really awesome client I got to work with as her real estate agent. And I'm really just excited to tell you this story, so let me continue. So at 18 years old, she actually knew what index funds were and higher interest savings account, right? So at 18, she started saving her money in index funds, which is a safer alternative inside of the stock market, even though I still prefer investing in real estate. And she put her money in higher interest savings accounts, right? So ever since she was 18, renting an apartment that I helped her find, all right? And when I first met her, she was a waitress, right? So she was saving all of her money and she was trying to become a registered nurse. So at 22 years old, she finally became a registered nurse and then upped her income, which was super cool because I actually saw her over the years meet her goal, since we keep up like every year. And after working as a registered nurse for a while, she reached out to like a mortgage lender and she was getting her mortgage all together. But then coronavirus kind of happened all of a sudden. So what was interesting is she told me that as she was working on getting her mortgage qualified and getting the pre-approval letter, she told me that her lender was kind of spooked on what was going on in the market as they were working on her loan. And she was mentioning how like the lending company and the mortgage loan originator, they like would respond to her slowly because they didn't know what was happening, right? And this was during the time that the interest rates were lowering, right? When they were trying to get her pre-approved for this mortgage. So anyways, after a lot of delay from her mortgage loan originator and the lending company, right, they finally still hooked her up with a grant for registered nurses in her local city, right? It was here in Austin. And the mortgage loan originator also hooked her up with like a deferred loan for purchasing a new construction home. So Jessica said she saved thousands of dollars on the down payment, and she drew out and withdrew like less money out of her savings than she expected to get into a new home. And even after the nurse grant and getting pre-approved for that mortgage, right, the interest rate she locked down was lower than the initial conversations that were happening, because it was all happening during COVID-19, right? So she locked down a 3.1% interest rate instead of over a 4% at the time. And that's for a 30-year fixed mortgage. So that all happened like early March of 2020, right when all this started happening, right when the stock market was about to crash. If you guys keep up with that stuff, in early March of 2020, that's when it all started going downhill. Anyway, so Jessica's overall financial preparedness and the fact that she was planning to buy a new home for years actually put her in a really strong position, and she locked down a great mortgage. And I thought it was a relevant story because, you know, as an apartment locator, mainly myself as a licensed real estate agent, I still work mainly with renter clients and people that are looking to rent an apartment. Jessica was an old client, so I helped her purchase the home. But a lot of my leads, right, are people that are still looking to rent an apartment. And a lot of my past clients are in an apartment, and they ask themselves if that's really where they want to be, and if paying rent is really worth it, right? Like, are you really okay with all of your hard-earned money just going to your landlord every single month instead of building up equity in your own home, especially with the super low interest rates right now? Experts say there's no real perfect time to buy a house, right? The best time is when it financially makes sense for you. And the answer to that is always 5 years ago, right? I bet you've heard that one, right? The best time to buy real estate was 5 years ago, and it's always 5 years ago. So that translates into just as soon as you're ready to actually invest in property. But regardless of the housing market and the pandemic, right, buying your first home is a matter of just a couple of things. The first is a stable income. If you've had a steady stream of income for at least a couple of years, that's probably a really good sign that you might be financially ready and able, to prove the last 2 years of tax returns in order to get a pre-approval letter for a mortgage. And the second thing is you have to really have a good handle on your debt. Your debt to income ratio, or your DTI, should be at around like a 43% or less in a lot of cases. Of course, the lower the DTI, like the better rate on your mortgage you're going to get. And if you combine that number with the third thing that's important, which is a good credit score of about 620 or over, then you're in a good spot, right? I also think that your emergency fund should be big enough to cover unexpected situations. So personally, I'd recommend having 3 to 6 to 12 months of your monthly income just set aside in an emergency fund. Like, if you can pay all your bills every single month for at least 6 months, I think that's a pretty good size emergency fund, if you ask me. All right, and the last thing is I think you should really consider buying if you know you're going to stay in a particular spot for an extended period of time, like at least over 2 years. So that way, when you do sell your house, you don't have to pay any taxes, right, on your primary homestead. So make sure you're going to stay in that house for at least 2 years so you can benefit with that as well. But if all that sounds like you, then congratulations. I think it's actually time for you to buy a house, even with everything going on in the market right now. But trust me, guys, buying your first house can be one of the most exhilarating but also stressful times of your whole entire life. I just did it not that long ago, several months ago. But it's really like a good kind of stress. I just realized it really does help you grow as a person and make you take another look or a triple look at all your finances. So it's really a good growing thing, and it's a sound investment, basically always, as long as you're financially prepared, like my client Jessica was as well, even at a weird point in time. And going back to that story, now that I just brought up Jessica, right? Her and her boyfriend are now comfortably settled into their new home. They got a year warranty because it was a new home construction, right? So they have that added peace of mind. And it really became a sanctuary for them when the pandemic laws and regulations forced everyone inside for the lockdown period. And Jessica told me that she really appreciated getting that all done when she did and move forward, even though the market was weird, because she got a good grant, a good mortgage, a super low interest rate that surprised everyone, and now she has no trouble inviting her friends over to her house, and she has no real pressure of having to go out because she's in a nicer house, right? And she got it done at a good cost. So Jessica says she's happy that she got it when she got it. So if you're thinking about buying a house right now, I still think it's a good idea, especially with Chase Bank's $3,000 down payment assistance program, which is called the Chase DreaMaker Mortgage Program. It's designed to help first-time home buyers and borrowers with low to moderate income levels afford mortgages and then buy their first home. They're offering $2,500 that you can use for closing costs or just buy down your interest rate. And what I mean by buying down your interest rate, this means that you can use that as down payment, right? And the bigger, your down payment is, usually the lender will give you a slightly better interest rate on your mortgage. And you might laugh at the 0.01% difference in this rate, but that can actually mean thousands of dollars saved over your full 30-year mortgage. So generally, it's a good idea to go ahead and offer more down payment on a house, especially because this money is free. It's a grant from Chase Bank, and it's $2,500. And on top of that, you can get an additional $500 if you actually go through what they call a certified home buyer program, which is essentially an educational course that you can sign up for. And that's kind of a common requirement for these mortgage assistance programs anyways, so nothing different there. And there's tons of free online home buying, like mortgage education programs online anyways, so it's not like it's hard to find these educational courses. Really, all you got to do is go to like the HUD website, right? The Housing and Urban Development. Just go to their website, and then they have resources for all the online education courses for you guys to look into. All right, so on top of that assistance, right, you can actually get a really competitive mortgage straight from Chase Bank with just a 3% down payment that can actually qualify from coming entirely from gift funds. And a gift fund is just money from like an outside party that's given to you, right? Maybe a family member wants to help you out with that down payment, if you're a lucky individual, but maybe it's an employer. Maybe like your employer has programs to help you with that kind of stuff as well. So that would also qualify if you're lucky to have an awesome employer. But even like a labor union, like that will also qualify, or any kind of charitable organization. So basically any money you get outside of the way you make income will qualify as well for that 3% down payment. So it's a bit more flexible, right? So if you are going to use gift money from some third-party outside source, a lot of the times these mortgage lenders will provide some sort of a letter just kind of from them proving that it's not like a loan that you're under, and it's really just free gift money. Right, and Chase is also offering cancelable reduced mortgage insurance as well. And mortgage insurance is like the insurance policy because you have less than 20% equity in your house. So like in case you might default on a payment, they charge you this premium. And everyone hates paying for the mortgage insurance monthly payments on top of everything else you're paying for, right? So they do let you cancel that as well before you have 20% equity in your home, which is really cool, right? So Chase will reduce this as well depending on your overall application. And then once you do reach 20%, you can just cancel it entirely, but that's pretty typical though, right? Now that we're on that topic, Bank of America does have a better program for down payment assistance when it comes to this no mortgage insurance, right? I actually just made a video about that as well, and you can find that video right over there. So you might want to compare the two as well. All right, so to qualify for all this stuff, right, you need a minimum credit score of 620 or higher. The higher the credit, the better the mortgage rate. A maximum DTI, right, debt to income ratio of like 45% max. And your income should also be under the AMI for whatever your county is. And AMI is the average median income. And that AMI zone is where your home is actually going to be located. That's where it comes into consideration. Better than paying for all that stuff yourself, but it's not as competitive as the Bank of America down payment assistance program, right? So honestly, I would just tell you guys to apply for both just in case one doesn't go through, right? Because Bank of America, that assistance will give you $10,000 for down payment instead of the $3,000 that Chase is doing. And then there's also a program that's going to help you get an additional $7,500 in closing costs, right? And you can use all of that just as a down payment. So it's $17,500 from Bank of America if you apply on time and qualify, right? So it sounds more competitive, but when there's free money programs like these, you might as well just apply to all of them in case one doesn't go through. But I did just do a video on the Bank of America down payment assistance program, so check that out right over there. So consider all of your options. So hey, if you're actually interested in buying your home right now, I do want to know about it and see what's going on today, right? So drop me a comment below if you're actually interested in buying your first home. And do you guys actually appreciate videos like this where I kind of go over the details of the housing programs for down payment assistance? And do you guys like when I tie in like a real client story? Let me know. Or would you rather I just stick to all the details and then leave out the client story, right? I actually do read all the comments below, and I like your feedback so that way I can make better content, and then you guys can more efficiently use your time watching all my videos. So let me know if you liked how I blended in a realistic client story in this example, or should I just omit that stuff for next time and just stick to all the details because that's what you clicked on? Let me know. I hope you did appreciate this video, and I hope it did add a lot of value. Don't miss a Bank of America video right next to me, because that seems like a more competitive program, but I still say just apply to all of them anyways. So hey, subscribe to my channel, because you know what, making these videos is actually pretty hard, and then you gotta pay to get them edited, you gotta pay to get them corrected. There's a lot of work that goes into making these videos for free. So if you do appreciate this, subscribe to the channel, please hit the like button, and let me know if you're actually considering buying a home right now, because I am actually curious. So that's it for this video, right? Don't let the pandemic scare you. If you're interested in buying a house, just go ahead and do it. There's tons of programs, and the interest rates are so low right now, right? So don't miss out on that opportunity. Investing in real estate is always a good idea. And 5 years from now, you're gonna be wondering, when's the best time to buy real estate? And it was 5 years before, which is today, right? I hope that actually made sense. I'll see you guys on the next one.